beginning our panel discussion momentarily. So just reminding everyone to just be comfortable as we begin this. So thank you again, everyone. So we'll be starting our panel discussion. So the topic of today will be derived from the presentation that all of you viewed by Thanida earlier. And this will be on the topic of financing climate action in Bangkok, challenges and opportunities. So I would like to invite to the stage Dr. Ornsaran Manuamorn, Kunpom, Senior Financial Specialist, Sector Specialist at the World Bank. And I would also like to invite Ms. Nikki Kemp, Executive Director of the Singapore Green Finance Center. I'd also like to invite Ms. Hongyu, Deputy Director of the Greenovation Hub. Last but not least, I'd like to once again invite to the stage Thanida, who will be moderating our session today.
Hello, hi. Okay, welcome back to our panel discussion, and thank you for staying with us for like in another hour an hour. So welcome you all to the panel discussion on the financing climate action in Bangkok, challenges and opportunity. So we have our panelists who between them hold a rich amount of the experiences and insights from across the region, which we would like to unpack during our discussion. Following from the earlier on presentation on the climate finance tracker, we now aim to dive deeper into a key priority areas of financing climate action in Bangkok and other urban environments in Asia. So this is particularly in terms of leveraging systematically map data to clearly identify priority climate mitigation and adaptation activities that are critically underfunded. And also, before we begin, just a gentle reminder that we will start with the discussion first, and then there's Q&A afterwards. But we make sure we have spare enough time for you to ask lots of questions to our panelists here. So actually, climate resilience is very vital to urban well-being. Yeah, we all. If you live in the urban, you know that the climate resilience becomes more and more important these days. It isn't still, but in a way, it still isn't receiving the attention it deserves. If you can see from the number that lots of financing comes into mitigation rather than the adaptation. And I'm looking into the tracker. There's also still substantial lack funding, actually in both, but a lot more in adaptation side. So we'd like now to turn into our distinguished guests to share their experiences about the most pressing climate concerns in Bangkok and cities across the globe and Asia, as well as how we overcome the prevailing information and data gaps. So first, we start with the World Bank, Kun Ornsaran. Based on the World Bank experience in assessing climate finance flows across Asia or maybe across the world in Thailand, especially in sub-regions as in Southeast Asia, what is your observation of the climate situation in Thailand?
Thank you very much, and thank you CFNT for inviting me from the World Bank to join this conversation. So to go back to your question, right? I think it would be useful to actually step back a little bit and take a global view of where things are with climate finance, because that would allow us to kind of understand where we are in Thailand with regards to the bigger picture, right? Next slide, please. So I'm from the World Bank. I used some slides and some graphs, but hope it illustrate the pattern, right? So with regards to the global climate finance landscape, right? I think there are both good news and not so good news. The good news that I want to share is that actually globally, right, climate finance is substantial and available. We estimate that there was around 1.4 trillion US dollar of global climate finance flow in 2020. So the resources are there. However, the not so good news is that only about 14% of these resources reach developing countries outside China. Actually, China has been the main receiver of global climate finance, right? And only 14% reach this country outside China, even though together they are responsible for around 40% of global emissions. Secondly, adaptation is particularly underfunded, not surprisingly. This is a global picture. Our estimates show that around only 16% of domestic and international climate finance in developing countries goes to adaptation. And over 98% of it is coming from public sources right now. And third, the World Bank estimate that going forward, right, developing countries will need three times more climate finance by 2030 to address the climate financing gap. And this would also include more lendings from their banks as well. However, at the moment, banks in developing countries are providing too little of climate finance. From the recent survey that we conducted, we found that climate finance is currently less than 5% of lending portfolio of nearly 60% of developing countries' bank. And 28% of the banks that responded to the survey say that they're not providing climate finance at all currently. So this overall picture is suggesting that there's a lot of funding gap for developing countries. But also I want to point out that that number may also reflect the tracking problem, that different banks are not collecting information and track it systematically. The actual number may be a bit more or less depending on the methodology you use to track. Next slide. So when it's come to Thailand, right, clearly within that landscape that I was just showing you, Thailand also is facing a climate financing gap. So I can give you a preview of our upcoming country climate and development report. It's a report that the World Bank is actually launching on this Friday for Thailand. And we estimate that Thailand will need additional 219 billion in climate investment over the next 25 years. So this is around 2.5% of cumulative GDP. And actually more of it will be for adaptation. So we estimate that around 115 billion is required for adaptation going forward. So to close this financing gap that Thailand has, we think to simplify it, there are two key priorities. Priority one is to advance sustainable finance through greening finance, which means enhance ability of financial institutions to identify and manage climate risk. But also we need to finance more green, which is to scale up investment in bankable projects that deliver climate benefits. And secondly, priority two is to try to unlock new sources of climate financing from international sources, domestic sources, including innovative financing from carbon finance instruments. This will be the key to help Thailand address the gap. Next slide. Thailand actually has made quite a lot of progress in strengthening the sustainable finance ecosystem of the country. Globally, there is actually this benchmarking survey by SPFN, Sustainable Banking and Finance Network, that assess where countries are with regards to putting in place sustainable finance ecosystem and how much money is actually flowing to real projects. So from this slide, you can see that Thailand is classified as being in the implementation stage, which is I think it's reflecting accurately where we are in the country. And this is in line with around 2/3 of the members of SBFN being surveyed in this country as well. So clearly we had foundation that needs to be strengthen and upscale. Next slide. Just to focus a little bit on the role of cities, it's very clear that cities can be very key climate actors. A lot of promising climate investment that deliver both mitigation and adaptation benefits can take place at city level. For example, in the transport sector, actually, you may know that Bangkok has pioneered the e-bus transaction that under the Article 6.2 of the Paris Agreement and has mobilized financing from Switzerland to finance emission reductions through this e-bus project. So it's clear that there has been a pilot demonstration of what is feasible when city takes action. But there are also many other opportunities for Thai cities to come up with interesting projects that will mobilize investment. For example, in the area of transport, the World Bank looked into the issue of TOD, transport-oriented development, which are investments that will close the travel distance, make more walkable districts, bring people closer to job, reduce car use. And we estimate that TOD investment for cities like Pattaya, Khon Kaen, or even Bangkok Outer Ring can mobilize more than 2 billion of investment per year if it's done properly and if it's being supported by clear framework for land management, land value capture, and governance. So this is example of projects that can be done, not to mention many other areas of climate investment that city can lead. And I'm talking about water resilience, heat resilience, coastal resilience for coastal cities, and also many nature-based solutions projects. As an example of how the World Bank is working with Thai cities to implement this concept of developing projects to mobilize climate finance, we are currently collaborating with Thailand, with the Department of Climate Change and Environment, and the government and other agencies to develop the low carbon city and carbon market development project. And the main idea of this project is to help cities invest in upgrading their public assets with low carbon investment. Think like a solar rooftop, for example, or better street lights, etc. And apart from upgrading this public asset, the project will help put in place infrastructure that would help measure, generate, aggregate, and monetize carbon credits that this public investment can generate. So the idea is that even though these investments are making sense on their own, but the ability to generate additional revenue from carbon credits that can be monetized in the international market will provide additional incentive and additional stream of climate finance to incentivize this kind of investment. So lastly, to conclude, I want to highlight that Thailand is at a good period where we can actually showcase a lot of what we do in climate actions and show our leadership in this area and mobilize more resources to the country. As many of you may know, next year Thailand will be the host to the World Bank and IMF annual meetings. This is like major economic meeting where all financial players, ministers, central bank governors, private sector will all come to Bangkok, right? And this will be the chance to showcase what we can do. To lead to this event, the World Bank is working on what we call a flagship report that will show off and discuss what could be what we call industry of the future for Thailand. And this includes digital services, green manufacturing, kitchen of the world, which is related to agribusinesses, sustainable tourism and creative economy. As you can see, that climate finance can play such a clear role in supporting many of these industries of the future. And in this report, we would also showcase the role of cities, how building sustainable cities, including secondary cities, could also be an engine of growth and could be a location where a lot of this investment take place. So I'll stop here. Thank you.
So Thank you very much. It's good to see that climate mitigation and adaptation needs in Thailand, and the number of adaptation is even more. And looking at the Building Thailand's Future today, the flagship report, it's also like a very good opportunity to advocate for the green finance to support all the sectors. So I have some follow-up question to Kun Ornsaran. So how can multilateral organizations support the growth of the urban climate action finance, especially in both mitigation or adaptation areas?
I think the example of the low carbon city project that we are working with Thailand right now is an example of how multilateral organization like the World Bank could partner with Thailand to develop a project that mobilize other sources of funding. And I think for us, since we work across different sectors, we don't just work on just this project. There are other engagement, for example, on blue financing, on water management, and these serve as an opportunity to put together a project that is cross-sectoral and also can mobilize different streams of financing.
Yeah, and how so that's all can apply to our city, but how can city attract more private investment or even international support to support that kind of low carbon city?
I think we need more bankable, creative projects because as we one of the key bottlenecks is in why climate finance don't scale more is because there is actually, I would argue, more finances wanting to invest into green than the available green assets out there. So if cities can seize opportunity to develop more projects in more sectors, actually, traditionally, a lot of climate projects in Thailand have been on energy and transport sector. But as we discussed today, there are many more opportunities in nature-based solution, water management, even projects related to health and well-being to address like heat stress, for example. If we have more of this project coming on board, it will be key to mobilize more climate investment into our cities.
Yeah, that's great. So more adaptation finance can come from the more projects initiated. So thank you very much. So moving on to Kun Nikki. Kun Nikki is from the Singapore Green Finance Center. So based on total climate finance flow from the tracker, how actionable is the data for activities that improve climate resilience?
Thank you for having me and the question. I think there's probably a lot of people here who don't know the Singapore Green Finance Centre. So just allow me a minute just to say who we are. So the Singapore Green Finance Centre was established at the end of 2020. So at a very difficult time for everyone because we were all locked down and struggling with how long we were going to be locked down and what our future looked like and how many people were going to be affected by the pandemic. It was an ambitious time and it was an ambitious project. It was established by the Monetary Authority of Singapore, Singapore's regulator, which is interesting in itself because it's an academically based centre of excellence. And it's embedded into Singapore Management University, so the MAS asked Singapore Management University to step up and establish this centre, but in collaboration with the Imperial College in London. So recognising that back in 2020, the conversation around sustainable finance, we didn't even talk about mitigation adaptation at that time. We were barely understanding what sustainable finance was in the region. So looking to where there was some thought leadership and helping to really accelerate Singapore and the region's understanding was important. So this partnership with Imperial College was seen as a real kickstarter for that. But the other kickstarter was the way in which the centre was structured, which is to collaborate closely with and have founding partners within the private sector financial institutions. So it was established with 9 financial institutions, 8 of which were global or are global, 1 Singaporean. And really, again, the idea, what's happening on the global stage? How do we bring this into the region on an accelerated basis? So really an interesting pioneering insight into how to really kickstart this understanding of sustainable finance and its opportunities. I wasn't there at the beginning, so I came in just over 18 months ago to lead the centre, and the important work that's been done around research. I just want to emphasise this because a lot of what we've talked about are gaps. I've heard the word come up. I didn't count, but I could say it's more than one hand for sure, maybe two hands. We talk about the gap in data, the gap in financing, the gaps that we have. And what I think is really important when we have the World Bank, we have think tanks, we have centres of excellence, is that we're filling those gaps with highly robust, empirical evidence-based, data-backed understanding, so that we're not filling those gaps with what we'd like to think we know, because we do that a lot. AI is now doing that with hallucinations. So we're all kind of falling into this. Let's fill the gaps and move forward. I'm not suggesting we don't move forward, but it's absolutely a critical imperative that we do so in ways that are going to have the highest possible impact, because we're running the clock's running out, right? So we have to. Yeah, it's very key. So we do research, education, and industry engagement. So making sure that connection into the industry, the research and the education isn't sort of left in the academic world, but is translated into usable knowledge. So that was a quick whistle-stop tour on the SGFC, the Singapore Green Finance Centre. SMU is also absolutely pioneering this concept of impact. So impact in society is key to everything that the university does. And I'm really keen, if there's any universities or academic institutions in the room, I'd love to talk to you about how we can partner with you in Thailand as well. We will certainly be looking at partnering further with yourselves. And this comes back to the importance of the data and the climate tracker. Data, I mentioned already, is so critically important to feel it's like the lifeblood. It's the foundation from which we build research. It's the foundation from which we build knowledge. There is another way to do research, which is models, use economic models. We know those models are just being completely destroyed by all the forecasts now. So we can rely less and less on those models unless we adapt them, I guess, and that's one question. But our economic models are really being thrown out the window by a number of key indicators around climate, nature, and other related changes, big changes. So data is key. The climate tracker data is really, really fascinating. We are working on some other things that I'll mention in a moment around data that I think will be really helpful for us to connect the dots. And I want us to hopefully do that more and more across the region. But as a cross-campus initiative, so we work across business school, we sit in the business school, but we work across our Urban Institute, law, accounting and policy. What we're looking at is what's the data that connects all the dots, right? And we know that, I'm going to come back to gap for a minute. The gap point, adaptation resilience financing gap for Asia is estimated by the CPI as really significant. So we're funding at the moment, regionally in Asia, less than 10% of the adaptation resilience funding required. So about 34 billion US as compared to 431 billion estimated need per year. Now, the more we deviate from the mitigation targets in the NDCs, the more that number's going to go up. So there's a very direct correlation here between the amount of action that we're putting and funding we're putting into mitigation and the amount of funding needed for adaptation. So we must never lose that connection, because there seems to be a bit of a pendulum at the moment swinging very, very fast towards adaptation resilience, and almost like 2 degrees. So 1.5 is kind of gone, 2 degrees. There's a report that's just come out recently from Australia that says that's now estimating 2.9 is what our realistic outcome is going to be. Well, let's round it up, 3 degrees. A 3-degree world is very, very different to a $431 billion adaptation resilience budget per year for Asia. So I'm just sort of painting the picture here around that connection. The data sets are interesting. Looking at it from a financing perspective is one way to look at the data sets needed. So how much financing is being deployed, or capital is being deployed, and what are the sources? And that's a very, very key and important piece of data or data sets that can be used. The other is, what are the projects? And I think you alluded to this or maybe it came up in your point as well. We don't know the data, the projects at the moment that we aren't tracking the funding for. So in other words, your track is fantastic. What about the projects that we're not seeing as a result of that financing lens? So we're looking at through the lens of the financing. And this is something that we are looking to build regionally as part of a knowledge hub. So I'm really keen to work with you and perhaps how we can work that through. But the key use of data, or the crucial role that data plays, is identifying funding, prioritising, collaborating on funding. So we'll come to that, I think, in a little while, around things like blended finance or just collaborative approaches, evaluating and monitoring the funding. So we don't know, if we're not monitoring it, we can't evaluate it, and we don't have the data, we can't monitor it. So that's an obvious relationship. And the final is advocacy and policy formation. And I'll talk to that a little bit further too in some examples, if I may. One of the things that we don't know globally, including Thailand, is how much, when there is a typhoon or a storm or a heat surge, how much of that climate event, how much of that weather event or that event is attributed to climate change. So this is speaking to that point around, I guess there's a lot of skeptics saying, we see these cycles and weather happens and, there's nothing new really. Well, there is. And there's some work that's being done that we're collaborating with the Grantham Institute in Imperial College, which is an climate attribution measure. It's being done in conjunction with the Red Cross and one of the European Met Services, Danish, I think. Anyway, it's really fascinating, because a lot of this data that you would typically get, you would draw from the insurance sector. And the insurance sector, of course, is perhaps far less penetrated here in Asia than it is in other developed countries. So if you look, for example, at the US, there's about a 50% penetration of insurance. And so if you want to extrapolate an outcome, a risk outcome, you can do that in a way that, okay, we could probably say 50% is a significant enough sample to say that that's an outcome, that's a risk outcome. Here in Asia, across Asia, now it differs per country and differs per sector, but across Asia on average, we're about 10% insured. So we can't use that data. It's just not, there's no way you could extrapolate 10% into something that is a usable data set. So this attribution to climate change is something we're building with the Grantham Institute on the back of their existing work. And what's even more important is then attributing the damage, right? So now we're getting into not only what is the additional uptick in the event severity, but what was the damage that was caused by that additional severity, and therefore we can start to evaluate the economic cost of inaction. And we will be able to produce this in a matter of weeks, as opposed to what typically takes 6 months, a year or longer when we're looking at insurance data and looking at that information flowing through. So these are some of the things that we're saying, okay, if we can get that into the economic dialogue and policy dialogue, we can start to see the action on climate, whether it is mitigation or adaptation resilience, shifting that significantly up the agenda, and we then know how much the comparison between acting now and the cost later is, and make that rational economic decision. So there's a few things that I think when we talk about data and we talk about climate tracker and we talk about the information, these are the really powerful things that we can do when we have the data and when we can use that data. But I'll pause there.
Yeah.
We go on and on.
Yeah, it's like we also see the importance of data, like all of us, and the economic impact will be a very good tool to either provide incentives or persuade people to be more keep an eye on the climate change. So speaking of like the time, as you say, like if the time goes on, the damage will be increased. The numbers we need for adaptation finance is so increased. So what are the biggest climate resilience concerns in Southeast Asia which require the most immediate funding attention? Is it too hard? But yeah, it's like everything is going on and on.
I was going to say everything.
Yeah.
No, seriously, I think it differs depending on the urban environment or the agrarian environment. It differs according to the countries and the exposure to some of the severity. So you look at Singapore, for example. Singapore isn't impacted by tropical storms. Well, we have storms, massive electrical storms, but where it's situated, it doesn't have the severity of these massive typhoons and storms that come through. So it's quite a different answer than if you're talking about Bangkok, or you're talking about Hong Kong, or you're talking about I think it's one of the things that I think we have to be careful of and be really conscious of is when we're talking particularly about resilience, is it's very local. So we have to respond to the local requirements. And I believe that and this is one of the foundation principles in our work, is that our response to research and education needs to be founded in the local needs and the articulation of those local needs locally, not the articulation of those local needs by Singapore for Bangkok or by London for Hanoi, or whatever the outside interest might be, irrespective of whether that capital comes from outside. So, and this is one of the things that I think has caused the failings of a number of the major financing initiatives from a global, multilateral, multi-investor perspective, is that there isn't sufficient of the localization of the understanding and the knowledge. People who are going to be most affected by climate, those people on the ground in the city or in the countryside, will find the solutions that they need. It's a question of, can we then attract that financing to those needs in a way that is bankable? And there's a gap there. There's multiple gaps there. Yeah.
Okay. Yeah. So local needs. Local context to tackle with the adaptation challenges. Yeah. So thank you very much, Nikki. So moving on to Hongyu. Hongyu is from Greenovation Hub. So based on your experience across Asia, so what are some of the biggest gaps in green finance policy, especially between national level and municipal level?
Thanks, Thanida, and thanks for inviting Greenovation Hub to join this discussion. Also, briefly to introduce our organization, we are a local environmental think tank based in Beijing, China, set up in 2012, and we've been tracking climate governance and energy transition, as well as looking at the financial regulation policies and also how to mobilize finance for global climate, international cooperation with global South countries in clean energy sector. Hello. And but yeah, basically as a local environmental think tank tracking the climate governance, energy transition, and climate finance since 2012, I'd also like to share some of the observation we have for how to mobilize finance for climate actions in China and also in the international cooperation with developing country in Asia like Central Asia and Pakistan. And to first start, the biggest challenge is some of the developing countries in Asia don't have the green finance policy system in place. They don't have the taxonomies or guidelines, and so they don't have the financial infrastructure to mobilize the finance to facilitate financial flow or attract the international ones. And for those who have the taxonomies and relatively some policy system, usually there are a disconnect between national government and local government in the implementation of green finance policies. For example, like in China, we have or in other countries, we have the guidelines, taxonomies. However, at the provincial, municipal level, they still lack the implementation guidelines. And also the climate finance, the mitigation, adaptation, they are sometimes mostly supervised or managed by different ministries or departments. For example, in China, the mitigation is led by NDRC, and also some are the adaptation that Ministry of Climate Finance and Ministry of Environment and Ecology, and the financial flow is governed by Central Bank and Ministry of Finance. So these multi-department coordination cost is high, and also it makes, although there are clear policy signals, however, when it translates the national policy into local action, it's still insufficient. And the second is the limited standard or ununified standards and lack of data. For climate finance in China, climate finance or financing for mitigation and adaptation falls into different policy narratives or systems. We have green finance championed by the central bank, which supports the green and low carbon activities. We also have climate financing and investment pilots championed or initiated by Ministry of Environment and Ecology, which is to introduce the 20+ local pilots to try to implement the China carbon neutrality goal and adaptation goal. And we also have transition finance taxonomy under consultation, which is to deal with the carbon-intensive sector's transition, which is not supported by green finance. So in these different policy systems, it's difficult for financial institutions and investors to identify the relevant projects and to ensure their standards, methodology are consistent or robust, and to avoid the greenwashing or brownwashing. So this is a lack of standards and data at the provincial level or subnational level. They usually lack the data on the greenhouse gas emissions, on climate risk, and also these carbon emission and risk data is scattered among like water resource, energy sector, meteorological departments. So they lack the shared data mechanism, which makes the cost of the third-party verification much higher in their total project cost. And also the incentive and risk or de-risk instrument is insufficient. Usually the local governments, they are really fiscally constrained. They don't have a lot of budget, especially in this economic situation globally. So although there are some central governments subsidy or incentives, the local governments, they are obliged to also come in to join the central government in providing the incentive. However, a lot of the local governments do not have the budget to incentivize their local climate investment. And also we have the carbon reduction carbon reduction facility issued by People's Bank of China. However, this is a good facility which leverage the financing from the commercial banks to support the mitigation projects. However, the term is really short. It's 1 year at the beginning, and then it is extended to 3 years. It is still very short term compared to the climate projects, which usually last at least more than 7 to 8 years. And so this also the mismatch of the incentive or instruments with the project demand is also a limitation. And also, when we look at the implementation at the local level, the local branches of the financial institution really lack the capacity and talents, in-house talents for them to implement the green finance or climate finance, because they don't know how to assess the climate risk. They don't know how to identify the green and low carbon projects with our transition projects, which without a taxonomy. And so this is the major challenge we see in common in like in China and other developing countries in Asia. And with these, the standards, the incentives, the project pipeline. Oh, right, the project pipeline. They don't have a lot of project pipeline or bankable projects, and especially at the municipal and lower level governments, their project pipelines, their projects are mainly at the conceptual level, so it's not ready to for financial institutions to finance. So these are really hindering the scaling up of climate finance, because in China and other countries there are many pilots already. However, it's mainly pilots. It's not replicable or scalable. So these are the barriers we find.
So what are like G-Hub's efforts regarding the data on climate finance? Do you see the finance landscape is different from China to Thailand, or is it the same?
Yeah, it's a little bit different than Thailand. I've learned a lot in the previous presentation. Well, in China, the financial market sector is dominated by state-owned commercial banks, and mainly state-owned commercial banks. And this is one uniqueness. And also, China has not labeled its adaptation projects apart from the mitigation. It's only we can only account the projects that in the green credit balance, green loan balance, around 66% of the green loan have direct or indirect carbon reduction effects. So this is based on the public data issued by the central bank every year. So we don't have the labeling for the adaptation, but we can still see some common characteristics. Is still in China, the mitigation is dominant. Like in the green finance market, the mitigation activity is dominant, and adaptation is still in a really minimum share. And also for the destination of the financial flow, for the adaptation, it's mainly going to the prevention of the flooding and sponge city, and also management of the water resources and wastewater, and also the ecological restoration or wetland restoration, and also the funding financial sources mainly come from the central budget, and also the provincial special debt. And also with the China mobilized PPP to also mobilize the private sector to finance the adaptation. And also because China is really a large country with different regions with different climate risks, we can see that the coastal areas in the eastern and southern part of China attract the most of adaptation finance, while the inland provinces, where they are hit by drought, by change of rainfall, they don't have their water management is mainly accounted in the their adaptation efforts mainly accounted in the water management. So we don't know for sure how much adaptation goes there. So it's also a low estimate, estimated lower than actual. And for the mitigation, mostly it goes to the renewables, the EVs, the infrastructure, green infrastructure upgrade, energy saving, etc. It's very similar. And yeah, this is the, if we say landscape, this is the basic landscape for China. And also, China actually has the largest green credit balance and green bond balance in the world now. So this is also due to the policy incentive or encouragement announced in 2016. So yeah, I will stop here.
Yeah. That's very glad to hear that you have like the data that can tell that coastal area receive this kind of adaptation effort, and then mainland there's no attached to water. You have another like project supporting that. So as China also the biggest receiver of the climate data by the World Bank, and you also have the largest green bond provided by the domestically. So how local and international partnerships help support the climate mitigation efforts, climate adaptation efforts?
I think it is really important to have the partnership in mobilizing climate finance, adaptation finance in particular, because usually the climate adaptation finance, the challenge is the high risk perception or the lack of bankability and difficult to quantify the climate adaptation benefits compared to the mitigation, and also lack of the historic climate risk data to evaluate our project for future. So I think for a lot of developing countries, and so also for local governments in China, they need the technical assistance and capacity building in the climate risk, physical risk assessment, in building the early warning system and the response system. One disaster that China faced in a big city is that they did the warning about the huge rainfall, but nobody responded. Everybody was going as normal. It's in the northern city of China, because the northern city never, in their memory, they never met that kind of flood or rain, and it caused huge loss, economic and lives losses. So the response mechanisms and how to evaluate the demand for adaptation finance, how to calculate that, and how to build project pipeline, I think it is also stressed for a lot of local governments. They actually, many projects have the co-benefits of adaptation, but they don't know it is, and they don't know how to articulate it, how to label it, and how to provide incentives for this kind of projects. So this is where the international partnership, because the MDBs and other international players, they have this knowledge and experience, could come in and support the local governments and developing countries to build up this kind of capacity.
Thank you very much. So we come to the second round. This is a question for the panel and also for you guys. So looking ahead, if you could change one thing in your current ecosystem to spur investment activity in climate resilience activity, what would it be? Something, yeah.
I may not have the most direct answer, but I would say I think Thailand has made a lot of investment in strengthening the ecosystem, and we should go more and strengthening all the key pillars that we already have put a lot of effort on. So if you look at the framework that Thailand put in place on this, there are 5 key pillars really. First, taxonomy. Second, data and disclosure. Third, to develop more product and services. Fourth, incentives. And fifth, human capital that would support this ecosystem. So I would say all of these pillars are very important. We should do more to strengthen the pillars. But among all of this, I would say we have worked a lot on taxonomy. We are strengthening the data and disclosure. I think the key is now to also look at the area of product and services and incentive to figure out what could work to spur more investment in Thailand. And this is the area where I would say even globally, the jury is still out. There are many models by which you can incentivize green investment. China has a lot of experience, but other countries also use different mechanisms. I think Thailand could now maybe move the dialogue into this area of more products, services, and incentives. Yeah.
Yeah. I don't know what else I'm going to add to that. That's so comprehensive, but perhaps a couple of provocative thoughts. We are in a region that is the most sensitive to climate. So whether it's, we've mentioned heat waves, floods, droughts, cyclones, or typhoons, and so there's an opportunity to really become leading thinkers in the areas of responding to climate. So whether you go from adaptation to resilience to, we were talking earlier to gentlemen about regeneration. So really, that's, to me, that's the sort of cascading of or elevating of thinking. So perhaps there's an opportunity for leadership. And so it's really repositioning the thinking. So yes, coming from perhaps a very limited knowledge and limited data and limited understanding, we can catapult very quickly forward, I believe, in the region. The reason why I think that is that we have an incredibly smart young population in the region, which I think you alluded to, and technology is a friend. We adopt technology very quickly in the region. It's a high adopter of technology. We know that these complex issues, and they are complex, and they have non-linear relationships that we're still trying to understand. The scientists are trying to pull together join the dots and so on. We know that AI is really good at joining non-linear kind of pathways and producing some really forward thinking. And so I actually think, just from something slightly different to the very comprehensive response that you made, is we've got an opportunity in the region to really do something very different. And one of those things that we're looking at AI with is blended finance, if I might bring that up at this point. And again, we have huge amounts of capital. There's huge amounts of capital looking for investment opportunities. We know this region is growing faster than any other part of the world. It continues to, a few ups and downs, but continues to be the fastest growing region in the world. So we know that there are investment opportunities here. The risk, okay, not everyone's comfortable with the risk, so we've got to figure out how to get the visibility of the data and so on in order to get comfortable with risks where there may be still some opaqueness or ambiguity. But there's a lot of different forms of capital coming from lots of different places in the world, including domestically. Interestingly, Thailand's domestic savings at 25% is a real opportunity that I think is somewhat untapped in terms of developing capital markets here and investment product, long-term investment product. The different forms of capital all have different appetites. When I say different appetites, we're talking about country-based, political, we're talking about sector, we're talking about long-term, short-term, we're talking about risk-reward equations, like what is the ROI on some of this investment? Lots and lots of different. Again, we know AI is really good at trying to figure out how to join all these dots. So if we start with a project map or a knowledge hub around projects, have a financing, we know what's happening with the financing as it exists now. There's almost a gap analysis that can be done around, okay, well, where are the projects that aren't being financed and why? And is there a combination of some sort, an optimal combination of capital that could come in and fund some of these projects? because maybe there's some risk-taking that we're not tapping onto. At the moment, a lot of these deals are being done because we know someone or we've done that deal with them before, so we'll blend with them again. And that's human nature. We're comfortable with people we've done a good deal with before, but I think there is an opportunity for a far more sophisticated response, a far more technology-enabled response to how we can play this forward. So I'm kind of excited about what the opportunities are, the space, the gap that we're not perhaps thinking about all the time in how we catapult the region forward.
Yeah, I think I have more than one. I cannot limit it to one, but I think first of all is to make the risk visible and tangible for financial institutions and investors. I think there's still a big gap in assessing the physical climate risk for the asset level, portfolio level, and so this is one. And another is to improve or set up or improve the taxonomy to make it easier for financial institutions to identify the adaptation activities or projects. China's green finance taxonomy already have a lot of activities that's adaptation. However, when we compare it with MDB, with CBI taxonomies, there are still a lot of sectors missing in China's taxonomy, and also China is revising its taxonomy on a regular basis, so recommendations have been submitted to enhance the resilience, especially when China so this is the taxonomy, and then really strengthen the mandatory climate information disclosure. This is the basis for carbon counting, for verify the adaptation projects and assess the physical risks, and make the financial institutions accountable. And thirdly is use NDC and NAP as a kind of an investment platform. I know that some countries are proposing this, and also it's one topic for Brazilian presidency. And we think that really build up the project pipeline through the NDC and NAPs, like be specific in the action plans, the demands measures in the NAP or NDCs. When we evaluate the when we evaluate the ASEAN NAPs, not all countries have an NAP, and the NAP are really very diverse and very different. So make the NAP really specific, and also allow for community-led proposals to participate in this investment portfolio. Lastly is to set up the adaptation benefit evaluation framework to quantify the adaptation benefit from the avoided losses, from the induced economic gains or cost, or and also the environmental and climate benefits. And it's already there, but we need to make it like a mainstream framework. And yeah, and also just lastly, in China's revised NDC, building a climate adaptive society by 2035 is in the goal. We are very happy about it, but it's very general. We need to translate it into these frameworks.
Yeah, thank you very much. So as we are Climate Finance Network, so I would like to ask you guys to talk to the person next to you. What does, if you can change one thing in your current ecosystem to spur investment activity, what will it be? So I give you 2 minutes. Each of you can talk to each other, like what will it be? And yeah, so we can have some networking going on. So I'll start the timer. Just 2 minutes before the Q&A, so you guys start to get along. 2 minutes starts in 2 minutes starts now. Yeah. Get together, person to your back. What kind of ecosystem you want to change? Anything? So we have like 15 minutes, 15 minutes for the question. So please, yeah, if you have any question to each, and okay.
uh, there's no like preparation beforehand. This is my yeah. So just one question to Hongyu. I noticed you mentioned that in your analysis, so 66%, right? So green loans are kind of related to carbon reduction. That means that China central bank requires banks to, I guess, disclose or report to them based on the green taxonomy. I'd just like to hear maybe a bit more elaboration because this could be something that we can follow in Thailand.
Yeah, let me get the part up. Yes, it is part of the China's green finance policy system. The central bank requires commercial banks to report quarterly about their green credit, green bond, insurance statistics in internal statistical system, and the central bank will evaluate the commercial bank's performance in the macroprudential assessment. And
Okay.
The higher scores, or the banks will enjoy more favorable reserve ratio.
So there's like incentives.
It's real incentive. So that is why since 2016 the green credit and green bond has been developing so fast, because they have this kind of incentive. And also, yeah, so that's how the central bank monitor, evaluate, and disclose. But when they disclose, they only disclose the aggregate, the total
big
number.
number.
Yeah.
Okay. Thank you.
More questions?
Any more questions from the floor, please?
I just want to say that's fantastic. Because finally we have a recognition of the reduction in risk that green finance creates within the economy. So I think that it's been called out, I think, at least for the last 10 years that I know of, for the Basel Accord to be amended accordingly, and the pushback has been consistently no, because it doesn't relate directly to credit risk. So how the data that China may have, the central bank may have, around that reduction in risk would be fascinating to feed into that conversation. Sorry, just adding.
One question.
Hello, I'm from PPP Thailand. So thank you, Ms. Hongyu, for raising the topic about how PPP can mobilize green finance. With this, the problem in Thailand that we have some legislation and some limitation. So I would like to know the model of China, because we have talked with CPPP before about adaptive finance, which is quite hard 3 years ago. But now, like, if you said, like, can you elaborate more that how can Thailand adopt this kind of model, because PPP like required very hard like feasibility study about this.
Yeah. actually, China at that time really encouraged PPP for a period of time. And actually, during that time, there were some risks, systematic risks at the local level. So then the government strengthens the regulation or requirement on PPP, but it is still, for now, China still can apply PPP in mobilizing the private sector. And usually it's the central bank, central government and local government, they will have use their fiscal, using their public budget and to, for example, project 50% is public finance by the government and 50% is by the commercial bank and private capital. We have a case on adaptation case, the Beijing Daxing Airport, they evaluate the climate risk, and also they had a project to build to manage the water resource, the rain, the rain garden, or the way to really absorb the heavy rain and floods. And that project is a PPP project by the public and private sector.
We still have time for
Yeah,
two,
we have
three
ample
more
time.
questions. Yeah.
It's Putra again. From the industry perspective, we especially hard to abate sector, with in SCG port, it's cement and petrochemical, and even though it's hard to abate, but we have a very different problems. One come from mineral, one is from the energy that we produce ourselves. So scope 1 is really big. But we always look for projects to invest in, especially to upgrade the facilities that we have, because we know that some of it is very new. One of our plants is starting up right now in Vietnam, and the plant in Thailand, some of them is only 10 years old, so it's gonna carry on through net zero. But technically, it's very challenging, and we want to upgrade it, but somehow the current economic mechanism doesn't allow us to do that. So that means that as long as we invest, at the moment it reflects to an additional cost for our customers, and nobody's paying for green at the moment on the product side. Even in Europe, they're tracking back, let alone Southeast Asia, where we have 600 million people, but we're still developing the economy. So from outside looking in, from World Bank and from Singapore and China, what should be the starting point of thinking about revamping our economy? I know it's a really big question, but the Thailand economy relies on buying the feedstock, convert it, and export. So the local consumption doesn't actually carry all the capacities that we have been installed in Southeast Asia. Not just Thailand, I think the whole of Southeast Asia is going that way. But and banks financing only a really low risk projects. And even with green loan, it's MLR minus 0.5 for us. So it's not really called a green finance. It's only a just preferential, because it comes in a big capital working capital loan rather than specific type of green loan. But for SME, we talk about 3%, which is good. But for us, a big company, we don't never get to 3%. So it doesn't allow us to do anything. And it's always, a risk and reward system. So what's your view on that? Especially for large conglomerate like, SCG.
To share some thoughts on this discussion, I think we also have to think about climate change and the impact of climate change from a kind of macroeconomic perspective, right? I think when we talk about investing in climate investment, it's not just about to sell products or to the market, but it's also about safeguarding our own economy, right? Without the climate investment, a lot of studies have shown that the impact of climate change on the economy could be high percentage of GDP Actually, the report that the World Bank will launch on Friday will talk more about this. So I think there are a lot of merits to think about climate investment as something that you do and you safeguard the economy from the impact of climate change. Secondly, a lot of investment, mitigation investment that you talk about makes a lot of sense on its own from the perspective of saving energy use, being more efficient in the production, co-benefits on reducing pollution on the economy. So these are investments that should be looked at, right? But in terms of the cost of financing, I'd agree that there's still that fundamental issue that when you try to invest in green, the cost is not necessarily cheaper, right? You issue green bonds, you may get some greenium on some deals, but on the whole, it's not significantly cheaper right now to mobilize green financing. But we also have to think about different ways to change the economics of the investment, not just from lowering interest rate per se, but I talked about the previous project that the World Bank is working on, the low carbon city, because we think that there got to be more incentive to do this green investment, and the way to, for example, monetize additional stream of investment from carbon credits is a way to provide additional incentive to this project and to change the economic somewhat in a way that doesn't have to rely on limited public subsidies for this investment. So I think these are the bigger consideration that we should bring into this discussion on climate investment more broadly.
Just one other thing to add to that, was very comprehensive, is the CBAM. So the carbon border adjustment mechanism, which is now going to impact any imports into Europe gradually. It's not cover different sectors slowly, including hard to abate sectors ultimately, is an interesting approach, because what it doesn't, I guess, help with is the opportunity to just find other, if it becomes too expensive to export into Europe, is to find other less expensive, or those that don't have a carbon tax effectively at the border on those carbon emissions, to export to those, right? And there are regionally here in this, just here in Asia, there are some massive economies that we know are alternatives at the moment that wouldn't have that same penalty, if you like, as the CBAM. So it's an interesting approach by Europe, and I think it's a great approach by Europe because it's trying to stop that leakage. But it has, it'll be interesting to see if others think similarly or not, or whether it's just too expensive. But I do think that pricing carbon and having a market for carbon is a very interesting opportunity for Asia. And if we could get to a point where there was a harmonised, effective carbon market, which I believe will need to be some sort of kind of hybrid of voluntary and compliance markets. In other words, some levels set and some standards set as to quality. Then I think that can perhaps provide the financial incentive that then gives you the opportunity to make those investments in a way that isn't just too expensive. Yeah. So really, it's an answer sort of circles around the carbon markets, but from two different angles, from a pure tax to a market-based mechanism.
We still have time. Yeah, just quickly, I think in addition to macroeconomic, I think for the companies, it is also important to manage the transition risk of climate change. So the transition, we've seen that jurisdictions across the regions are strengthening the disclosure, sustainability disclosure, the carbon setting up carbon markets or carbon tax. So it's this trend is there. It's just how fast we are getting there. So for large corporates, leading corporates, mainly to invest in future, to guard against the transition risk and invest in future opportunity. And to reduce your financing cost, one suggestion that China has been proposing is to encourage the corporates to issue green panda bond or sustainability-linked panda bond in China, because China's now the financing cost is like 2 point something percentage. It's lower than the international market. So we've seen that Suzano, the leading paper pulp company from Brazil, they issued the first one last year, and they will issue the second one this year. So this is one. And also with the harmonization standards, the China-EU Common Ground Taxonomy and Singapore joint, and now it's multi-jurisdiction common taxonomy, and Brazil also submitted the application to join to the co-chair. That's what I heard. And also the co-chairs are inviting the Asian developing countries to also join. So with this harmonization, you can also tap into the international investors in the China's bond market. So it could be a way to reduce the cost.
We should have time for one more question. I have very short question. I'm aware that the next 45 years, Bangkok will be submerged underwater. I mean, part of Bangkok. So I just wonder, what is the role of the World Bank to contribute for this long-term adaptation of Bangkok?
Big question, but actually, as I mentioned, that the World Bank is working with different agencies to kind of try to support climate investment in Thailand. And actually, on this issue of flood and water, we also are in discussion with Thailand to support, to upscale investment in water resilience. Actually, as you may know, after the major flood, Thailand has developed kind of master plan to manage flood issues, especially in the Chao Phraya Basin. They call the 9 plans. So this is one of the things that the World Bank is engaging with Thailand to also support this investment under the 9 plans to materialize, because this will be very important in safeguarding cities like Bangkok. In addition, we also engaging to support the conversation around blue finance, because many cities in Thailand are coastal cities, right? And we are facing issues such as coastal erosion, which in the long run will affect these cities negatively. So there are investment in the coastal sector, like coastal rehabilitation, that could also be a good project to mobilize climate finance for Thailand. So we are also engaging in that dialogue as well.
Yeah, hi. More of an observation. In terms of the private sector, it would be beneficial to address the adaptation gap if they were to perhaps see and perhaps copy best practice from elsewhere, whereby it is really in their interest to treat their assets as at risk from all these stresses, from the climate extreme events, from the long-term changes, and over their useful lifetime, 30, 40, 50 years, and the increased maintenance that these continuous stresses will impose, the continuous need for financing for maintenance. Hence, spending a bit upfront through insurance, through own funds, and other mechanisms will ultimately have a beneficial benefit to cost ratio.
Can I just quickly respond to that? I agree 100%. The problem is we suffer very badly from the tragedy of the horizon, which is embedded in our economic system, which is quarterly, annual, even sometimes shorter than that, a reporting cycle on growth, and this is right from a country perspective through corporates and financial institutions. We don't look far enough ahead. We're not forced to look far enough ahead. And so the priorities today are always have primacy over what's going to happen in 10, 15, well, we don't even go 10, 5, 10, 15 years, 45 years' time. I mean, we have this system that is mismatched with the risk profile that we're facing. So it's like the boiling frog. We'll get there eventually. Might be too late. No, won't be too late. So I do think I agree with you 100%. It would be an absolute wonderful fix if we could force the evaluation of those risks into our economic evaluations from a country level through to corporates and the other players in the economic system, and that would take some pretty gutsy policy. Yeah, because there'd be a lot of loss that we'd have to account for.
Yeah, so thank you for all the questions, and thank you very much to our distinguished panelists, Kun Ornsaran, Kun Nikki, and Kun Hongyu. So please give a round of applause to them. Thank you.
Thank you to our distinguished panelists, Kun Pom, Nikki, and Hongyu for joining us today. So we ask you to just please remain momentarily. We would like to actually give a few tokens of appreciation for taking the time for joining us today. Yes, and of course, Kun Sarini, who is the director for CFNT, to also present the gifts to them. You can just come over here.